Hello, everyone. Welcome to today's live stream. So as I mentioned earlier this week, we are doing them a bit earlier for a few weeks just to see how it goes. I thought maybe it would be a bit more useful to have these at 10 in the morning. So we've got the whole day really to look at levels and stuff that we discussed. We have got quite a lot to go through today. A lot's happened over the last few days. Let me just sort my screen. We've got a snazzy new introduction screen, because I keep forgetting to tell people they can ask to look for other markets. So we thought we'd put that on there just to remind people. I think we're going to focus quite a bit today on the euro and the dollar because on Wednesday night we had the US interest rate decision. So we'll talk more about that. There was quite some surprising stuff in there. And just in the last hour, let me drag this across to show you from Twitter. We've had PMI data, manufacturing data out of Germany, and it's come in. I think it's been its lowest since 2008. So it's a real surprise, that data. So we have seen that the euro and the DAX, hopefully you can see that on your screens, that the blue there is where it came in, just how much the German economy is slowing. So we've seen the euro take a bit of a bath this morning. So we'll take a look at that in a bit more detail. Let me just leave the risk warning up just for a bit to give people a chance to read it. So it's a really interesting start to the week. So good morning to everybody. I think you see there's someone from Australia on. Morning. And a couple of others in the comments. So again, use those comments on YouTube to ask any questions. So just a bit of housekeeping and promo stuff before we start. We are running, if you're in the UK, I'm running this seminar a week tomorrow at Heathrow, the Radisson Edwardian something hotel in Heathrow. That's the program. The registration link for that, I've put that in the comments on the side. I'll put it below in the description once the video goes up. It's all free. So we're going to, in this, I'm going to talk about some of the techniques we talk about on here, but in a bit more depth. We'll look at, it's not going to be just a day on theory, the trends should do this and MACDs do this. We'll talk about real world examples, and I'll talk about sort of my trading experience over the last 3 months, really, because I had a really good January, a mediocre Feb, and March is okay so far. And sort of the things I've learned and how we can try and put some of those mistakes into practice. So it's going to be quite a practical day. So if you can make it, we'd love to see you. So it's a week tomorrow, Heathrow, 10:30 till 4:30-ish. And the registration link is on the side. So there's that. And the other thing we're doing this, if you open an account, if you go to Capital.com/David, the link's in the side as well. Open a real money trading account. I'm doing a 30-minute Skype session one-on-one where we'll talk about markets to trade, trading strategies, risk management, all of that sort of stuff. Okay, so there we go. There's all the commercial breaks out the way. Let's take a look. Let's take a look at the markets. So let's start off with the euro. So we've had this German manufacturing data this morning has come in quite a bit lower than expected. We did see, just to recap on where the European economy is, the Italian economy has gone into recession. The German economy narrowly avoided recession last quarter, by showing 0% growth. But I suppose what's happened today has heightened the risks of the German economy slipping into recession. And I think why it's simple, we'll talk a bit about Wednesday in a minute, Wednesday night, but why it's interesting, we'd had this trend I've been talking about. Had been going for a couple of weeks on euro US dollar, and I was looking at this yesterday when it sold off yesterday back to 113.50. It bounced a bit, and I thought if it comes back down to these lows today, that's a buying opportunity. We've got logical places for the stops. Clearly, we've seen this massive move, relatively speaking. There we go. Let's make it a 5-minute chart. So the market starts moving from about 8:15 this morning. So the euro US dollar was about 113.90. So it dropped 100 points, which for the euro at the moment is a big move because of the lack of volatility. So we've seen a relatively big move for the euro this morning. But as ever, I think with these big moves, I often wonder, well, is it an overreaction? Are we seeing that is a surprise number? Has the market overreacted? So I think it's going to be a really interesting day to watch the euro against the dollar, because we'd had this rally off that European Central Bank interest rate decision. 2 weeks ago, wasn't it? 2 weeks yesterday. The market had gone from 111.80 as high as 114.50 on Wednesday night, so nearly a 300-point rise, and it's given back a whole chunk of those gains. But we have seen a lot of support around 113 the other week. This is, I think I was talking about it, the trade I did. I bought in at 113.05 with a stop loss under this low. So I'm wondering if we see, I think maybe the aggressive trade here for me would be to be a buyer now with a stop either the other side of the low so far today, which is what, 112.88-ish, or maybe a stop the other side of this low from March the 13th, which is 112.60 or something like that, 112.75, something like that. So I think that's the aggressive trade. I think the calmer trade is not to do anything on the euro today and see where we are on Monday coming into next week. So I think either way, personally, I'm looking to buy, because I think okay, we've got absolutely clobbered, but we have a lot of support here. Let's see what happens. I think if it starts pushing below that low from this morning, then the risk is we're going to see a bit more pressure this afternoon. And if it goes below, for me, that 112, whatever it was, 77 area, okay, the risk is, well, maybe we're going to have a deeper sell-off. But I think it's really interesting, this move. So on the hourly RSI, not surprising, really oversold on the hourly RSI after such a sharp move. It's the most oversold we've seen the hourlies actually since the lows from the interest rate decision. So since this interest rate decision lows 2 weeks ago. But you can see the RSI carried on going oversold. Yeah, so just because the RSI has dipped into oversold doesn't necessarily mean the selling's over. But I think it's interesting here. Let's take a look on the dailies. What the dailies look like. There we go. So the RSI, you can see the size of the turnaround. It's given up in the last 2 days. It's given up a week's worth of gains, and this has been the story for the euro for the last few months. It rallies a bit, but just can't hang on to it. So I think it's going to be interesting. The RSI had gone overbought just about on Wednesday night on that US interest rate decision. But so for me today, the euro is the market to watch. Let's see what happens. Let me just see if we've got anything else, any other major data coming out today. From memory, I don't think we have, but let me just have a quick look what we've got coming out this afternoon. US, we got existing home sales in the US. Okay, so not a whole load of stuff. Canadian inflation at lunchtime. No, so not a whole load of stuff coming out. But let's see what happens to the euro for the rest of today. But I think that's really interesting, that move today. And I think the DAX took a bit of a pasting as well. So we'll have a look at that when we look at indices. But what's also been interesting this week is this US interest rate decision. Let's stick with the euro for now. So on Wednesday night at 6 o'clock, 6 o'clock UK time, we had the interest rate decision from the US central bank. Everyone was expecting no change, and that's exactly what they delivered. But what they also said, which wasn't expected, they didn't see any more rate rises in the US this year. And that's why we saw this rocket underneath the euro and other markets. We'll look at these other markets as we go through today. So that was a real surprise, because I think we were expecting maybe one, maybe two more interest rate rises in the US this year. But the Federal Reserve, the US central bank, said because they were concerned about the US economy, there'd be no more rate rises. So I thought that was interesting, and we saw this market, the euro. So there's the move in the euro. So from 113.50 to about 114.50 in as soon as the announcement came out. So the euro traded to its best levels since Feb. So that was a big move. So that was the move on Wednesday. But I think for now, we'll look at the dollar index in a minute. But I think for now, the euros one to watch. Let's see, do this morning's lows hold? If they don't, does 112.70 hold? If that doesn't hold, the risk is for a sell-off. Personally, I'll be watching to see if we see any strength come in. So let's just stick with that US interest rate decision. And what I'm going to look at, I put this on Twitter yesterday. I thought this was interesting. We launched the dollar index as a market a few weeks back, and we talked about it then. The dollar index is a really interesting one because it's the US dollar against a basket of other currencies. The euro makes up, I think it's 57% of the basket. And then there's the pound, the yen, the Swiss franc, blah, 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 blah. So it's all on Wikipedia if you want to see what makes up the basket. But so it's basically, it's the dollar against a basket of other currencies. So what I thought was interesting, again, if we go back to this interest rate decision from the US on Wednesday night, so you can see where they say no more rate rises this year. We're worried about the US economy. Not surprising, the dollar falls off a cliff, because traditionally, rate rises are good for that particular currency because it makes it more attractive. So to say there are going to be no more rate rises is a big change. And also to be cautious on the outlook for the economy, you'll normally see the currency hit. So we saw the dollar index go from 96.43 down to 95.70 by sort of, 7 o'clock in the evening. So within an hour. And that's a pretty big move. If I take this chart back, you can see it's not the most volatile of things during the day, but bang, that's a really big move. But I thought what's interesting, and it's still happening now. So we had this surprise negative news for the dollar on Wednesday night. But yesterday, it's clawed back all of those losses. So I think, so that does make me think, maybe there's more dollar strength to come. It's always interesting how markets react to surprise news. Let's say a company comes out with what on the face of it is positive news, but the share sells off. There's maybe a warning in there. If a company goes up on what you would perceive to be negative news, it shows their strength. And this is what I think we might be seeing with the US dollar. That's pretty bad news, surprise bad news on Wednesday night, and it's clawed back all those losses and more. So I think this is going to be another interesting market, the dollar index to watch going into next week. Maybe we'll see, if you were bullish on the dollar and you wanted like a longer term position on the dollar for the rest of the year, I think you've got an obvious place for your stops. The tightest stop I would want was below that low from Wednesday night, because we've turned around really sharply from those levels. So let's just go back to the dailies and look at it. So that's been our recovery in the dollar index since April last year. 98 are the highs. If we can break 98, I think maybe we'll see another extended recovery. But I think it's quite interesting that it has turned things around. So I think we'll talk about these a bit more on Monday. But I think these are the euro against the US dollar and the dollar index, which is DXY on our platform. I think these are going to be interesting markets to watch next week. Okay, so that's that. So that's catching up on what's been happening over the last 48 hours or so. Let's talk about the pound. I mean, the Brexit, who knows where we are in Brexit? I'm sure, by the time between starting this and looking at it now, I'm sure things have changed again. So at the moment, the UK is trying to get an extension. We're due to leave a week today. It doesn't look like we are going to leave a week today, but who knows? So we are going to try and get an extension. And I think the EU have said you can have an extension till the 22nd of May if Parliament agrees Theresa May's deal, or you can only have an extension till sometime in April, can't remember when, if they don't agree the deal. And then I suppose there's still the possibility we could leave next week, but that seems more and more unlikely. Anyway, so we've seen the pound come under pressure this week. But what's interesting, this is pound US dollar. We'll have a look at euro sterling in a minute. Maybe what's interesting here, if we go back, sort of bigger picture, a bit more of a relaxed view rather than the day-to-day volatility. We go back to the lows from January this year. I'd argue we are still, there we go, just about in that trend for the pound against the dollar. It probed through yesterday, a big sell-off yesterday. It did recover a bit as the day went on, but it's pushed lower. So I think, it's a bit of a roulette wheel at the moment, I think, the pounds, because we're as we're getting closer and closer, it just seems to change hour by hour. So I think it's a difficult market to trade. But clearly, again, I think maybe one for next week when we have a better idea of what's going on. These lows had been pretty important. These lows, 129.70, the whole 129.70 to 130 area had been important. So for me, again, I'd be looking to see if the price snaps back from here. So I flipped this over to an hourly. So this was all the fun and games last week. So we saw it trade as low as 129.50, 129.60 in Asian trade, rocketed up last Monday, sold off again on Tuesday, held at 130, rallied again. We had a boring end to the week, and this has been this week. So I do wonder, next week, assuming we are going to have a clearer picture of what's going on, do we see some strength coming back in for the pound? But 129.50 to 130 is a level to watch. Personally, I'd much rather watch the euro at the moment because there's too much of this. The pound is politically driven. But I think, yeah, let's see what happens. Maybe we've already seen the low for this move. It traded to 130. What was that last night? About 5-6 o'clock last night. But let's see what happens on the pound. And one last one, euro sterling. Then we'll get into these other markets. Let's take a look. I mean, clearly the euro's taking a bit of a pasting this morning. Let's look on the dailies for euro sterling. Here's that move. We were talking about this the other week, and I was saying that the euro against the pound had been stuck in this massive range from 86, not massive, 86 to 91 for about 18 months. It fell out of the range, and I said, well, maybe that ends up being something of a false break. At the moment, it does look like that. Like it traded down to 84.68, 84.70. And we have seen it bounce back, 200, 230 points or so. So I'd still be, arguably, if we saw euro sterling come under some pressure, go back towards these lows, watch again for the bounce. Watch again for the bounce ahead of 84.60. So, yeah, interesting, crazy times, I think, as ever. Right. So there's that. So I think, so for me, just to recap, I think the euro is an interesting one to watch today. Euro against the dollar. What's it doing? It's still, let's have a quick look before we have a look at some of the other markets, gold and oil. Okay, it's still sort of pretty stable now. So let's take a look at the price of gold. So of course, on Wednesday night, we saw US dollar weakness. US dollar weakness means that things quoted against the dollar will go up, and there we have the move in gold. Okay, so we saw gold before the announcement was trading at 1302, and about half an hour after the announcement, it rallied by about $15. Okay, and we were, I was wasn't expecting it to move like that necessarily, but I still think, going back to the bigger picture view for gold, that recovery off those August lows is still intact. The market sold off into March, held above the lows for the year. So I think for longer term traders, 1275, 1280 is still the big level for gold, the lows for the year so far. We've pushed away. So that's the move yesterday, traded as high as 1320. So for me, the target is still initially a run back to those highs around about 1345, is it up there? And if it can break there, a move back up to this 1360 to 1380 problem area that has stopped any rallies for 2.5 years. But for now, the recovery is still going. Let's take a look on the hourlies just to see if we can pick up on any levels. There we go. It's a great, that's a great trend we've got going on the hourlies since those lows around about 1280 from whenever it was. Let's just pick up on that. So there's our, what's that, 2-week trend chugging away. It came back towards the trend line before the Fed announcement, came back to it again. When's that? Yesterday, 3 o'clock after yesterday, down to 1304. So for me, if I was trading it off the hourly charts, I'd definitely be paying a lot of attention to this trend. So short-term support from about 1298 through to 1303. But for now, expecting the price of gold to continue to chug higher. Okay, oil price. We have seen oil break $60 a barrel. So, but again, I've been saying I think 60 is going to be a problem. We have traded above it, but for now at least, for me, I think the jury is still out on whether this is a false break. Again, you can't deny the strength in oil. It was only, is it yesterday? It's only yesterday, 2 o'clock yesterday afternoon, we saw the oil price hit its best levels this year. So that strength is still there. But I just wonder, maybe at 60, because it's psychological, sort of a big level, do we start to see some nerves coming back in? I would still be inclined to be a buyer on weakness. If we see the market sell off down to sort of 58, 58.50, look for another squeeze up to $60 a barrel. I'm just not sure how convinced I would be about buying up here at 60, because it keeps pushing out to these new highs and just can't really follow through. So it's still positive. That recovery clearly still going from December. For me, the better trades are weakness, like I say, maybe $1 lower than here. Ideally, even down to these lows from early March, around about 55, then looking for it to hook back up to 60. So I think it just feels a little bit tired up here. Looking at the oscillators, looking at the RSI, we have been overbought for the last week or so. It has pushed higher. But and it is still positive, but I think we just need a sustained move through 60. And at the moment, it still feels a bit overstretched. I'd much rather get a chance of buying it down here somewhere rather than buying here and hoping it's going to blast higher. So let's see what happens. Right, stock market indices, and then we will take a look at some of the questions coming in. So if you've got any questions or stuff you want looking at, just put them in the chat on YouTube and we'll take a look. So the theme at the beginning of this week was stock markets. Are we going to see stock markets break out to fresh highs? And we have seen it. We'll have a look at a few markets today, but let's start with the S&P 500. We've seen the broader US stock market index just yesterday. It pushed out to 2862. That was its best level since the first week of October, second week of October. We have, on the S&P, cleared these highs. I thought these highs were going to be much more of a problem than they were. I suppose they were a problem in March, but these highs from October, November, December have been cleared. So at the moment, if we think this is a valid breakout, the logical next target is for a run back to the all-time highs from September. Okay, so which does seem, I think, quite incredible. If you can remember back in December, when the world and his wife was really bearish and panicky about markets, when they were falling off a cliff, and here we are with the prospect of maybe we're going to see fresh all-time highs in the not too distant. Let's see what happens. But I think clearly it's still strong. It hit for 5-month high yesterday. Let's take a look at some of the short-term levels, and it went like a rocket yesterday. That's the move yesterday. So right from the official open, it hardly looked back. So we had 3 hours of the S&P just rising, taking out the highs from early in the week, and bang. So again, if we see it come under pressure, for me, the right approach would look to be a buyer on weakness. The logical level to watch, yesterday's lows just before the official open, around about 2809. So this whole 2810 to 2820 area, you'd expect to be good support. We've got good support back here, middle of March at 2804. So there's a whole load of support from 2800 through to 2820 for the S&P. So for me, if it comes under pressure, definitely be looking for it to snap back. And I think it's only if it starts losing 2800 are we at the risk of a deeper sell-off. But for now, it's a market that is still incredibly strong. Let's take a look at the Dow, then we'll look at the NASDAQ. Interestingly, I mentioned this earlier this week, the Dow hasn't yet this week pushed to fresh highs for the year. We do have this problem area running from 26,000 to 26.3. We did go overbought in Feb. The market rolled over on the RSI. The RSI is pretty much in the middle now. But the Dow, as of yet, hasn't threatened the February highs, so which is a bit of a strange one. You would expect these indices normally to move together. So clearly there are some shares that are not performing as well as the broader S&P index. So let's see what happens. Maybe the Dow is the one that weighs on other markets and we see these things drag down. But that's a bit slightly different on the Dow compared to the S&P. There was yesterday's move. Got as high as 26,000 almost on the nose, but couldn't get within the highs from earlier in the week at 26,100. Quick look at the NASDAQ. The NASDAQ has been, I think, the outperformer this week. This is interesting, though. You can see, hopefully you can see on the right-hand side here, market sentiment. So this is what our clients are doing. And this is always the way. This is, I think, one of the main reasons that many people find trading hard and struggle to put together consistent profits. What has this market done over the last 2 weeks? It has gone up. Which way are our clients positioned? You can see 62% of people who have trades on this market are short. Yeah, so when a market, this is the problem. People have a real problem trading with trends, and we're seeing it right there in our market sentiment figures. But that's always the case, and I don't think it'll ever change. People always want to trade against the trend, but clearly, when we have a market like this is the Nasdaq, which over the last 2 weeks or so has hardly had a down day. So again, the Nasdaq yesterday pushing out to fresh highs for the year. It got as high as 75.10. The all-time highs are just above 77. So that would be, I think, the next logical target for this market. Let's take a look at the European markets. Let's look at the DAX. Clearly, the DAX is getting hit today because of that German manufacturing data. So it is still in its trend since late December. It did hit highs for the year on Tuesday, but since then it has decoupled a bit from what's been going on in US markets, and it's under pressure. And clearly that negative German data today isn't going to help sentiment. So for me, the levels to watch on the DAX, you can see it on the daily chart. You can see these lows from late Feb and again 8th of March ahead of 11,400. So it's currently 11,500. Let's take a look on the hourlies. Here we go. So these lows here is maybe the next levels to watch. These were the highs in Feb, bit of a problem, breaks through, comes back, and we had lots of retests of 11.4. So maybe that's the question for the DAX today and Monday. Are we going to see the buyers come back in again ahead of 11.4, or are worries about the state of the German economy going to continue to weigh on the German stock market index? So the DAX is doing its own thing compared to other markets. And finally, the FTSE. Then we will get into any questions. So the FTSE, I think we're going to put a video up later on today on our YouTube channel, which is me doing a bit more of a more in-depth view about where the FTSE could go and possible hurdles and all that sort of stuff. But again, the FTSE yesterday hitting its best levels for the year so far, trading up to 73.80 almost. I think we were looking at it when it was breaking through 7,200 in mid-Feb, sold off a bit, built a base, and bang, it's pushed higher. So again, I think with the FTSE, as with US stock markets at the moment, you want to be a buyer of dips. I think, our trend looks something like that on the FTSE. There we go. So we've got support coming in around about 7,100. Bigger support coming in 7,050. It is overbought on the RSI. Okay, it did go overbought here, sold off for a day, and then this one here did cause it to pause. So I think if we did see the FTSE under pressure, I think it's an interesting trade for next week, assuming all this stuff is going to halt. Maybe we get a buying opportunity next week on the FTSE. So let's see. So plenty to keep an eye on. But I think, like we said at the beginning, the really interesting market, I think, for today is that euro. And I don't think it's moved much since we look at it. So we had that knee-jerk bang sell-off, and we've had it stabilize ahead of 1290. So I think, interesting market to watch the rest of today. Right, let's get into the questions. Are we due for a correction as the markets in the US are flying? Of course, we will get a correction at some point, but it will happen when no one's expecting it, I reckon. And I think again, at the moment, if we just go back to that S&P chart, you'd want to be a buyer. I don't know, you wouldn't necessarily want to be a buyer, but for me, with the trend like it is on the S&P, which way are clients on the S&P? We've got a bit more balance. We actually have the majority of people who have a trade on the S&P are long. So we've got 54% buyers on the S&P. So you do think, like we saw in December last year, if we do get a correction and it picks up speed, it could be quite a vicious one because the market has come so far, because we have, rallied so much since those Christmas lows. But there's no sign of it coming yet, So, I don't know. I would still be a buyer, I think, and make sure clearly you have stop losses and stuff like that. And if the trend changes, we'll look at it in a different way. Can we check World Wrestling Entertainment, WWE? Okay, that's a new one. Let's have a look. WWE. Oh, we don't cover it, WWE, I don't think. So that's not one you can trade with us. So we'll never know what that one looks like. Unfortunately, we can't do that one. Sterling yen. We did look at sterling yen this week, didn't we? And I did say I wouldn't be a buyer. The pound up here, I think 150 was a problem, wasn't it? Let's have a look. Here we go. So it has, again, with this weakness in the pound over the last couple of days, we've seen it sell off again, and I don't think that's a surprise, is it? Really, when we looked at this earlier in the week, it was saying what a problem 150 has been for the pound against the yen going back to May last year. So May, no one at the moment, the market at the moment doesn't think the pound is worth more than 150 yen, and we've seen it play out again. Yeah, so it rallied up to wherever it was, 148.80, and it sold off. I suppose an aggressive trade here. Let's flip this over to the hourly chart on sterling yen. Oh, actually, yeah, this could be an aggressive trade, right? So it sold on the way up. It sort of hovered around 143.75, pushes out to 148.50 something, sells off again 143, almost exactly the same level, 143.70, 75, something like that. Rallies, and here we are again. So I suppose we've bounced off it. I would. If I had to do a trade now, I'd be a buyer. There we go. That because I think it's interesting that a short-term buyer on sterling yen. Because if we pick up on these levels, let's just pick up on this. It's a really big level. This over the last 3 weeks. Came back to it yesterday. Rallies, sells off, and we've held above it again. So for me, I could be a buyer maybe with a stop loss either under this low, the low from yesterday, or under these big lows. Yeah. So I think let's come back to it again next week and see. So the big picture doesn't change. 150, massive problem. But maybe, considering the sell-off we've seen this week, maybe we're going to hook it back up and go for another look at 148. So the hourly chart and the daily chart, both interesting, both giving, I think, slightly different views, but that's completely acceptable with the different timeframes. Can we have a look at Apple? Yes, let's have a look at Apple. Let's have a look at that. Let's have a look at the Apple share price. Wow, still going up. So if we flip over to the dailies, I mean, it's been an interesting story in Apple this year because we had the highs in October at 232. Then, of course, selling off, broader market selling off, everything getting dragged down, trades as low as 140. That was a big fall. We did have right at the beginning of the year, didn't we? We had that. It was almost a profit warning from Apple, or a downgrade in their revenues, that they were going to make slightly gazillions less than they thought they would because people are hanging onto their phones longer. So we did have that downgradey thing, slipped to a new low for the downtrend. But I suppose if we picked up on this downtrend, where is it? Oh, I've drawn it in the wrong place. Let me just do it again. It did break out of that downtrend, which is, I don't know, something like that. So we did break out actually on its earnings, because there's the gap. And I remember we were talking about it, saying that 160 had been a bit of a problem. So broke through 160. And since then, that recovery is still going. So for me, I'd be a buyer. It's just always the problem is, I think, in sort of runaway trends like this, where do you put your stop loss? So it ended yesterday at 195. I mean, I'd rather buy it at 175, obviously. So, but because if I'm buying up there, where's my stop going to go? It would still be down here for me, to be honest, below those March the 8th lows. So, but I still think it looks strong. We've cleared these old highs here, about 185. Maybe a bit of a problem at 200, maybe a bit of a psychological sort of level, $200 a share. But I think for now, any weakness, still, to me at least, still looks like a buying opportunity. Yeah, very overbought, as you'd expect. The share price has moved more than 10%, a lot more than 10%, 15% by the looks of it, in just the last couple of weeks or so. But that's a big move, clearly, for a big company. Very overbought, but still strong. Let's see if we get a correction. Let's take a look on the hourly chart. If you wanted to really short-term trade it, I mean, yesterday, again, it just gapped from the open and just went up all day, didn't it? So I suppose if we were looking for a bit of a sell-off today, I'd be watching if it dips back below 190. I think an aggressive trade, maybe a stop loss below these lows from the 20th of March. But you cannot deny the strength at the moment of the all-conquering Apple share price. There we go. That's it. No more questions. So I think we're done. So we'll do it all again on, I can't remember, Monday, 10 o'clock on Monday. We'll do our look ahead to the week. I would say the euro is a really interesting one to watch. It's holding around 113. Let's see what the rest of the day brings. I think that will be an interesting market next week, euro dollar, after the 100-point collapse so far today. And let's see what US stock markets do when they open this afternoon. So thanks for coming along. Don't forget, have a look if you want to open an account, if you use that link that I'm going to put below this video, you get 30 minutes Skype training with me. And there's that Heathrow seminar a week tomorrow, and that's all free. It's open to clients and non-clients, and hopefully see you next Monday anyway. So have a good weekend, everyone. Thanks for coming along, and let's see where we are on Monday.